everybody. So we'll get started with the new standard today, that is Accounting Standard 12, which talks about accounting for government grants. AS 12, which talks about accounting for the government grants. So what does government grant mean? This term, government grant means. So government is giving us something. That is the meaning of that. The meaning the word is throwing up. Government is granting us something. It could be anything, cash or whatever, right? So if you are getting some cash or some assets from the government, how should we record it is what AS 12 is all about. Are we fine, everyone? All right. Now, one basic question. Normally, companies pay or the entities pay tax to the government. Yes. Entities pay tax to the government. Or will government pay entity? Entity will pay government or government will pay entity? Entity will pay government. Generally, entities pay to the government, and that only we call it as tax. We have various kinds of tax which various people, individuals as well as entities, pay to the government. But here we are not talking about that. We are talking about government granting the entity something. When will that happen, sir? Is government crazy? Normally, every government would like to collect as much as possible in the form of tax, because using that money only they can do the developments, right? So the more money, the more the tijori, the more the treasure, the more the development activities or the programs the government can run. But here we are talking about government giving something. Why? How is that?
Backward area, the industries are not coming, so that's why to promote them, government is doing that.
Perfect. Yes. Yes, generally, yes, the entities pay tax to the government, but also in certain cases, government also helps out the entities. Like when COVID hit, every central government as well as state government, didn't they offer the COVID relief packages?
20 lakh.
Yeah, some like, some 1,000 rupees or this much ration and all this, was it not given? Correct? All those are what? Government giving back to the people, entity or whatever. Yes or no? All right. So government also in some circumstances will give back to the entity. Or to give you a better example, let's say, I think this probably would have happened. So let's take this. So a few years ago, we had a new state called Telangana.
Yes, sir.
Correct. It's not so new anymore, but yes, it was, right? Let's say Mukesh Ambani went to Telangana state government and they said, I would like to set up a factory in your state. What do you think Telangana state will say? Oh, please come. We want a lot of businessmen to establish the businesses in our state so that our state can prosper. Mukesh Ambani went further and he told, sir, if I set up my factory in your state, I will create 1 lakh job opportunities. I can give job to 1 lakh of your state people. What do you think Telangana state government will be now? I'll be very happy, correct? Oh, super. Please come. We were waiting for you people only. Please do come. But Mr. Mukesh Ambani sir is also very smart. You know what he asked? Why should I come to you? I'll go to Karnataka. I'll go to Hyderabad. I'll go to Gujarat. I'll go to other states. Why should I set up my factory in your state? What's in it for me? Then the state government told, oh, you're playing this card. Okay, no problem. I will give you 1 lakh square foot of land at free of cost. Come. I will give you the land to set up your factory at free of cost. Come. 0 penny. Just come and set up the factory. I will give it at free. Now what do you think Mukesh Ambani sir will say? This is what I was looking for. Correct? Then he'll come. Correct? Yes. So what did the government do over here? The government gave a land to an entity. Yes or no? And did that entity or that Reliance company pay any money for that land, or it got it at free of cost? Free of cost. That means government is granting the entity something. So if you are getting such things from the government, how should we account it is all AS 12 is trying to cover. Got the meaning? So government also helps out the entities. And if at all you have received from some money from the government, money or any other asset, how to account, we're going to be studying. So overall picture is clear, everybody? Okay, awesome. So AS 12 only covers if you have received some cash or any other asset from the government. Okay, the same thing you will be learning in your CA final also. A little bit extra. A few things you'll learn here and little extra you'll learn it in CA final. I only stick to the AS portion for the time being. Alright. Whenever you are receiving any grant from the government, there are two broad approaches. It's a simple, very standard. if you're receiving any grant from the government, you can account it under what I said? Two approach. One under capital approach or under income approach. Either you can account it under capital approach, sir, or under income approach. If you are utilizing or if you conclude that it is a capital grant, see, grant could be two types, capital grants or a revenue grant. If it is a capital grant, no, it will be shown in balance sheet as capital reserve. Where do you show any reserve, sir? Under shareholders funds. Yes, no? So any capital grant received from the government will be shown under shareholders funds as a capital reserve. That's all. That's the first aspect. Or if you conclude it is a revenue grant and all will go where, sir? All revenue expense, revenue income, where it will go? P&L account. So revenue grant received from the government will go to P&L. Is it okay? So grant the company is receiving or are they paying? The company is receiving. So is it an expense or is it an income? Income. So this under income approach, you will show the grant as an income in P&L. Are we okay? Actually, there are two options. Either you can show it as an income in P&L, or to fulfill, government will give the grant just like that, or they'll put some conditions. Like here in my example, Telangana government, they are giving the land at free of cost. Just like that they will give off, or they may put some conditions. They may put some conditions like you should be the director of the company. Telangana government may tell Mukesh Ambani, you should be the director of the company for the next 5 years. You should not quit your position. Okay. You should create a job for 1 lakh people. The employment opportunity should not fall below 1 lakh. If it falls below, I will take back my land. Like this, government also may put 101 terms and conditions. Yes or no? To fulfill the terms and conditions, should you have to incur any expenses?
Yes, sir.
Like in the Telangana state government, what is the condition? You have to create 1 lakh employment opportunities. That means you need to hire how many people? 1 lakh people. Just like that, can you hire and keep quiet, or you also need to pay them salary? You need to pay them salary. Correct? No, that means to fulfill the grant, there is some cost involved. Either grant received, you can show it as a separate income, or you can reduce it from the related expense. To fulfill the grant, you are incurring some expense, no? The grant income, you set it off with the expense. Either set it off with the expense or show it as a separate income. Don't worry, first I will run through it, then we'll have a lot of questions. We'll keep covering them. Everybody understood this? Okay, so let's have a quick recap again. So government grants only covers what, sir? Either some cash or some other asset received from the government. What are the two broad approaches I said? Capital approach, income approach. Capital approach means whatever grant you received, you will show in your balance sheet as a capital reserve under shareholders funds. Income approach means
Profit and loss.
the grant received will go to P&L. Either you can show it as a separate income, or you can reduce this grant from the related expense. Whatever expense you are incurring to fulfill the terms and condition, this grant received, you can set it off with that. Those are the two broad approaches. Fair enough, everyone. Now, when to decide or how to decide whether it is a capital approach or whether it is a income approach? Simple, sir. I'll go back to the example. Now, Telangana government gave what to Reliance? Land. For what purpose?
For construction.
To set up a business, correct? To set up a business. Now you tell me, this is a recurring or a non-recurring item?
Non-recurring.
Non-recurring. Now you tell me whether it is a revenue grant or a capital grant? Capital grant. Are we okay? That's how to conclude. Alright. If the grant received from the government is in the nature of promoter's contribution, we say. What did I say? Standard use the term what? If the grant received from the government is in the nature of promoter, they have not written, somewhere they have written, okay, here, is in the nature of promoter's contribution, then such a grant we call it as what? Capital grant, and it should be accounted as a capital receipt. Sir, who is a promoter?
Those who start the company.
Promoter is that guy who helps the business to start. Correct? No. Here, what did the Telangana government do? They gave a land to set up a business. So that means, are they not indirectly acting like a promoter?
Yes, sir.
Are they not helping the company to set up the business? Yes or no? That is the reason. Is it a revenue grant or a capital grant? It's like company, the government has introduced capital into your business. Are we okay? So hence such a grant we accounted under capital approach, meaning it will be treated as capital reserve. Are we okay, sir? So that which is not a capital grant automatically becomes a revenue grant. One if you know, other one is a balancing figure. Correct or no, sir? Yes, people, no people, what people?
Yes.
Yes, sir. So again, come back. How do you decode whether it is a capital grant or a revenue grant? What is the key term? The grant received is in the nature of promoter's contribution. Meaning the grant that you're receiving from the government is like promoter ka contribution. Promoter will contribute for what? Setting up a business. So if the grant received from the government is like or is towards setting up of a business, then it is a capital grant and you'll account it under capital approach, meaning transfer it off to capital reserve. Easy. Okay. This is the first aspect. There are only hardly 4 to 5 theory concepts over here. Remaining things are all journal entries and problems. Okay. So first aspect, can I put it off tick that all of you have got it? All right. Next, recognition of government grant. Meaning when should we? I told you standard only covers what? Any standard it covers only 4 components. Recognition, measurement, presentation, disclosure. So now we are talking about when should we recognize a government grant. Correct, no? Especially during elections, government will promise 101 things. We'll give you star, moon, we will send you everywhere. Do you think every of those promises will get fulfilled? Or many of them are also in Hawa? Many of them are in the air only, correct? They will be in the air only. Probably they will not get fulfilled. Yes? So that means when should we account this grant in the books? For you to account grant in the books, they brought in 2 conditions. If 2 conditions are fulfilled, you can go ahead and recognize the government grant in your books. Meaning you can go ahead and pass the journal entry. What are those? 1, there should be a reasonable assurance that we're going to fulfill the conditions. Because do you think government will give the grant just like that or they will put some conditions? Conditions. In my land example, what is the condition? Mukesh Ambani should be the director for 5 years. Employment opportunity should not go below 1 lakh. Like this, there were some conditions. So the day company gets reasonable assurance that they will fulfill the conditions, not necessarily it should be fulfilled. They should have assurance that it will be fulfilled. Hope. Like you're right, you're preparing the exams now. Have you already cleared the exam? No. But you have the hope that you will clear the exam? Yes. That hope is what we are looking for over here. Okay. If you have a reasonable assurance that you will fulfill the conditions, whatever conditions, the terms and condition is there for the grant. If company has a reasonable assurance that they will fulfill it, that is the first criteria to recognize the government grant. Okay, sir. Second one is the promises should not be fake. Meaning you should also have a reasonable assurance that you will actually receive grant from the government. Because government will say 101 things, many of them, but will they fulfill everything? No. So you should also have a reasonable assurance that the grant will be received. So how can we prove this? Maybe you can get into a contract with a government, oral or written, or at least have a mail confirmation. That depends practical, case to case basis, it differs. Okay, but you should have a reasonable assurance that the grant will be received. You don't have to wait till the grant is received. The day you get a reasonable assurance of 2 things. What are those 2 things? The conditions will be fulfilled and the grant will be received. Whenever you get reasonable assurance of these 2 things, you can go ahead and recognize the grant in your books. Need a minute?
No, sir.
Same conditions are there in India as also, sir. Learn it. So same things will continue next level also. All right. Next is non-monetary grant. Before I get on to this, let me explain you what is this monetary first, and then we'll explain what is non-monetary. Sir, monetary means the value is fixed. Those items for which the value is fixed, we call it as what, sir? Monetary. So monetary means value fixed. Like if you have 500 rupees Gandhi note with you, what is its value? 500 rupees. If you have 2000 rupees Gandhi note, we don't see that often these days, but if you have it, what is its value? 2000. That means value is fixed, no? Correct? So cash is an example of what? Monetary item. Are we okay with you? Let's say you have a debtor worth 1 lakh rupees. You have sold goods to a debtor worth how much rupees, sir? 1 lakh. How much will that debtor pay you? Will he pay you 1,20,000 or 1 lakh only? 1 lakh only. So value is changing or fixed? Fixed. So debtor is an example of what? Monetary item. You have purchased the goods from creditors for 2 lakh rupees. How much will you pay the creditor? 2 lakh rupees. Value fluctuating or fixed? Fixed. That means creditor is an example of what? Monetary item. Are we okay with this? But did you get the meaning of the term monetary? The value is fixed. That means non-monetary means what?
Inventory.
The value fluctuates. Can you give me an example of non-monetary?
Inventory.
Perfect. Shares is if you invest in shares of a particular company. Let's say today you bought the shares of Nika. Okay.
150.
Okay. Or Infosys. You bought the shares of Infosys. Tomorrow it will be same. Or the value keeps fluctuating. Fluctuating. That means this asset ka value, is it same or it's fluctuating? Fluctuating. That means this is an example of what? Non-monetary items. Basically, non-monetary means value fixed or value fluctuates. Value fluctuates. We can write like that. So an example is investment in shares, then inventory. Because if you have inventory, you'll sell the inventory at same price or the price depends on the demand and economic conditions. If you are a shirt dealer, throughout the year you'll sell the shirt at the same price or it depends on the season also. During maybe Deepavali, Dasara, Christmas and all, you may give heavy discount and sell it at a lower price. Possible. During other off season, you may increase the price also. So is the price or the value of that inventory fixed or fluctuates? Fluctuates. Yes, no? So inventory is an example of what item then? Non-monetary item. Similarly, property, plant and equipment. Property, plant and equipment means, sir, instead of fixed assets, we call it as property, plant and equipment. I have bought a camera today by paying, let's say, 50,000 rupees. After 6 months also, its value will be 50,000 only, or it may increase or decrease also. It may increase or it may decrease. Yes, based on the economic condition. So is the value fixed or fluctuating? Fluctuating means it may either increase or it may reduce. So property, plant and equipment is an example of what? Non-monetary item. So did you get the meaning of the term monetary and non-monetary, everybody? What does monetary means? The value is fixed. What does non-monetary mean? Value fluctuates, whether it increases or whether it reduces. Okay? Alright, here what are they saying? Non-monetary government grant. So government is giving you something, but are they giving you cash?
No, sir.
Because cash is an example of monetary or non-monetary? Cash is an example of monetary because monetary means the value is fixed. Yes, no? So non-monetary grant means government is giving you some land. They're giving you some building. They're giving you some intangible assets like software, patent, etc. etc. Okay, did you understand? If you're getting any license or land, building or other assets from the government, you're not getting cash, you're getting intangible asset or you're getting some tangible assets. In that case, what to do? We are testing. Okay, everyone. Here you can just put up into two things: non-monetary grant . You need not write all this. All this is there in the chart. Just for the sake of explanation, I'm writing this. If you are receiving any non-monetary grant from the government, let's take the example of land. Same example. In our example, what did the Reliance receive from the Telangana government? Land. Let's say they received land worth 100 crore rupees. Telangana government gave Reliance land worth how much? 100 crore rupees. First check whether the land or this particular asset is received at free of cost or whether it is received at concessional value. It could be anything.
Yes.
Right? First case, mein Telangana government told the Reliance, land totally free for you. Take. Bendas. Majja madi. Land is worth how much, sir? 100 crores. But how much did Reliance company paying to this Telangana government to buy this land? Zero. Because they are getting this at a free of cost. Got the first scenario? Or second scenario, Telangana government is little smart. They say, land is worth 100 crore. No? I'll give it to you at 10 crore rupees. Worth of the land is 100 crore, but you can buy. It is Telangana government is telling the Reliance, you can buy this land from me by paying how much value? Just 10 crore rupees. That means now, is it a free of cost or at a discount? That only I'm referring it to as concessional value. Check which scenario is getting triggered over here. If you are receiving non-monetary grant, received at free of cost or at a concessional price. If you are receiving the grant at free of cost, what the standard says is record. What did you receive, sir? What did you receive as grant here? You received land. Correct? So record the land at a nominal value. Record this land at a nominal value. That nominal value could be 10 rupees, 100 rupees, 1000 rupees, anything. Just show this land, let's say at 100 rupees in the books for the sake of control. Even shareholders should come to know that you are having this land, no? Correct? They will get to know only if you account it. So if you are receiving any land at free of cost, standard says you record it at nominal value. And this nominal value has to be 100 or it could be anything. It could be anything. We are doing this so that land account will come into our books and shareholders will come to know that we have been received this particular land at free of cost from the government. Like that. Understood this? Yes. Nominal value could be anything, sir. 10 rupees also okay. Chalega. 1 rupee also okay. 100 also okay. Just record it. That's all. Second one is what? Second case is what? Are you receiving it at free of cost or at a discounted price? And what is that discounted price, sir? 10 crore. That means the land will be recorded at 10 crore itself. If you are receiving the grant at concessional value, then record that grant at or record that asset at concessional value only. In my example, what is the concessional value? 10 crore. So record at 10 crore only. So that means the journal entry will pass as land account. And simply write land account debit 10 crore is to you paid, no? So to bank account 10 crore. Basically record this land at concessional value itself. In other case, you can pass the journal entry land account debit to P&L 100 rupees, 100 rupees. It is okay. Fair enough, huh? This is the next concept. Any confusion anybody is having? Concessional means not free. Concession means concession could be 100% concession also. Concession could be 10% concession also. Concession means some discount. The discount could be 100% also. The discount could be any other percentage also. Okay, G. All right. Don't worry. Easy only. Just few little bit of theory things because they may ask these things also at 2 marks. Generally, they ask 5 marker question from this. Nice journal entry problems are there. Quite easy ones. But this also we should know. Okay. I think, yeah. This part is important for our examination. Alright. Before that, I'll just get to it and just have a quick recap again. What did we learn so far? Accounting standard 12, which talks about accounting for government grants. This only gets triggered if you have received any cash or any other asset from whom? From the government. The 2 broad-based approaches is, if you are receiving any grant from the government in the form of cash, 2 broad-based approaches is capital approach, income approach. When will capital approach get triggered? If the grant looks like capital contribution from the government. If the grant looks like capital contribution, that only we say if the grant is in the nature of promoter's contribution, then such a grant is a capital grant and it will be shown as capital reserve under shareholders funds in balance sheet. All other grant becomes your revenue grant and this revenue grant goes off to P&L. Either you can book the revenue grant as an income or reduce this from the related expense. Okay, 2 broad approaches. Then we looked at what? Recognition criteria for government grant. What are the 2 recognition criteria? There should be a reasonable assurance of 2 things. What are those 2 things?
The entity will comply with the conditions attached.
Reasonable assurance that the entity will comply with the conditions 1, and the reasonable assurance that the grant will be received from the government. It should not be a false promise. You should have a reasonable assurance that you will receive this grant from the government. Then we looked at if you are receiving any non-monetary grant from the government. Non-monetary grant means what?
Value fluctuating.
The value is fluctuating. Meaning if you are receiving any asset from the government directly, you are not getting cash from the government. What are you getting? Directly some fixed asset or an intangible asset if you are receiving. Then what to do? Then check how have you received that grant. Have you received it at free of cost or have you received it at a concessional value? If you are received at free of cost, record this asset in your books because you have that asset, no? You are using that asset, no? So you have to show that asset in your books. But have you paid any money? No. That is the reason record this land at a nominal value. 1 rupee, 10 rupee, 100 rupees, anything chalega. But show it in your books at nominal value. Alright? Or second case, you have received it at a concessional price. Concessional price means you have received it at a discounted price. In that case, what will you do? Record that asset at the discounted price itself. Meaning if you're paying 10 crores to buy that asset, then record that asset at 10 crore only. If you paid 5 crore to buy that asset, record it at 5 crore. That's the component. Okay, now comply means to fulfill, right? Like that. Comply means fulfilling the conditions. Sorry, sir. No. In that case, what to do? I'm just going for that. Okay, how to do it? This I'm going to target that. All right. Okay. Grants related to specific assets. So this particular concept is important from examination. Generally, a lot of questions from this particular standard gets asked of pertaining to this particular concept. Grants related to specific fixed asset. In this cases, what happens is, let's say the government tells you construct a factory building. You construct a factory building. If you do that, I will give you grant of 10 lakh rupees in the form of cash. Do you understand? Once again, I'll tell you. You buy, government is telling you buy a machinery, or let me tell you this. Government has some scheme. They want to improve the economy of a particular state. They have some scheme. So you approach the government and tell, I will increase the production. I will improve the economy. But for that, I need to buy a machinery. Because to produce the goods, I need to buy machinery. So a company has purchased machinery worth 1 crore rupees. They have already purchased on their own. After purchase, government gave a grant of 10 lakh rupees. What is the scenario? Company has purchased a plant and machinery of 1 crore rupees. After that, government gave, because the company purchased a machinery, government is giving a grant of how much rupees? 10 lakh rupees. So that means, isn't this grant related to a specific fixed asset?
Yes, sir.
In my example, what grant did you receive?
10 lakh.
You received a grant in the form of cash or check. How much value?
10 lakh.
10 lakh. Why did you receive this grant?
Purchase of machinery.
Because why this grant was received is because the company purchased a plant and machinery worth 1 crore rupees. Yes, no? Only if the company purchases this asset, the government will give a grant. Correct or not, sir? So isn't this grant directly related to a specific fixed asset?
Yes, sir.
Isn't this grant related to specific fixed asset, sir? Yes. If this is the case, means what to do is what we are about to learn. For this scenario, there are two methods. There are two methods. I'll explain that method in the form of journal entry with the problem itself. You'll understand it better. Okay, everyone got the scenario? So grant is related to a specific fixed asset. In that case, what to do? This particular question. Come to question number 1, all of you. Let's take care of that and then see how you are placed. Can we start reading the question? Z Limited purchased a fixed asset for 50 lakh rupees. It has the estimated useful life of 5 years with a salvage value or residual value of 5 lakh. On purchase of the asset, meaning after purchasing the asset, government granted it a grant of how much? After purchasing the asset, government gave a grant of how much value? 10 lakh rupees. Did they say this grant is given in the form of asset? They just say government gave a grant of 10 lakh. So what is this 10 lakh rupees? This is the grant received in the form of cash. Cash or check or whatever. Okay, sir? Isn't this a grant related to a specific fixed asset? Which fixed asset?
Specific.
We don't know. They have not given. The company purchased a fixed asset. That is the reason government gave a grant of 10 lakh. So this grant is clearly related to that fixed asset. First conclusion. Everybody okay? Any confusions? No. Pass the journal entry in the books of the company for the first 2 years if the grant amount is deducted from the value of fixed asset and when the grant is treated as deferred income. Sir, I told you here there are two methods. Yes, you remember?
Yes, sir.
Maybe I'll just call the method name and I'll tell you how the method works with the help of journal entry. First method we say asset cost reduction method. Asset cost reduction method. Company is free to choose. Okay, they can either go for method number 1 or they can go for method number 2. Both the things with the journal entry from the beginning till the end. I'll show you so that you'll have that end to end recap. First is asset cost reduction method. Second one is deferred government grant method. Deferred government grant income method, you can call it, or deferred government grant method, you can call it. Or some books also call it as deferred income method also. Anything you can call it, it's okay. Asset cost reduction method or deferred income method or deferred government grant method. Can I show you how both the method works? Everybody? Alright, so this all is a simple problem. So let's take care. Question number 1. What is the first method I told, sir? Asset cost reduction method. Asset cost reduction method. They ask the journal entry for 2 years, right? So date, particulars, debit, credit. Have they told all the numbers are in lakhs or anything like that? Or nothing like that? Nothing. Okay. What da? LF and all is not required. A ledger folio and all, you leave it. It's not required. Even if you want to have, it's not a problem, but this is okay. Somebody is asking, what is LF? We left that gully long back. Ledger folio. In journal, we'll give a ledger reference. In ledger, we give a journal reference. Those are not required. It's fine. They were relevant when you're keeping the books of accounts on a manual system, where you used to write the accounting journal entry, like the way you're writing, updating your notes, accountant used to pass journal entries. These days, everything we do it in computer based. So all that has become redundant. Okay. Have you made the format, everyone? You want me to wait or start to? Start. One by one, we'll go for, sir. First, what did the company do as part of their first transaction? They purchased a fixed asset. What is the journal entry for fixed asset purchased? Fixed asset account debit to bank account. How much did they purchase this fixed asset for? 50 lakh, 50 lakh. Okay, now. Narration is must, sir. You can simply write it in your own words. Being fixed asset purchased. First transaction. After purchasing fixed asset, what did the government do? Government gave us some grant. That means company is receiving the grant or paying the grant, or what is happening? Company is receiving the grant. That means what you have to do? Bank account should be debited. Agreed? Because the company is receiving the money. How much grant the company is receiving? They are receiving a grant of 10 lakh rupees. So you will debit bank to the extent of 10 lakh. Yes, sir.
Yes, sir.
Sir, what? Check the screen, all of you. What is the method name, sir? Asset cost reduction method. So whenever you receive the grant, that grant will be adjusted against the cost of the asset. Meaning whenever you receive the grant, the cost of the asset will get reduced. Because honestly, you think, sir, or maybe the entry here is bank account debit to fixed asset account. How much value? 10 lakh rupees. Fair enough. Now, honestly, you tell me, from your pocket, how much money really went out for this fixed asset? 50 lakh or only 40 lakhs? Though you paid 50 lakhs initially, how much grant government gave you? 10 lakh. So 50 lakh on one hand it went out, another 10 lakh it came back to you. Effectively, how much money went out to you for fixed asset? 40 lakh. That is the reason grant received will be reduced from the cost of the asset. Hence the method name asset cost reduction method. Comfortable, sir? Any asset, whatever is the respective fixed asset, you will credit that. Okay, sir? Okay, so narration will be being grant received. You can write it in your own words, not a big deal. Online also comfortable till here, right? Yes. So they asked the journal entries for how many years?
2 years.
2 years. Any drama happened?
No, sir.
Oh, that's all. First problem, so hardly any drama. You purchased the fixed asset and you received some grant. So do you have that fixed asset with you?
Yes, sir.
Did you use it for the whole year? Yes. If you are using it for the whole year, will you also calculate what on that fixed asset? Depreciation. Can I calculate depreciation? What is the journal entry for depreciation? Depreciation account debit to fixed asset account. Okay. Now check the screen. You can put it as a separate working note or show the working note here only. Is it okay if I show it here for you? Now check the screen. Data you can copy. It's okay. For what value? Sir, have they told which method of depreciation?
Straight line method.
Where?
No, sir.
Not told. but they have given useful life and they have given salvage value. That means automatically it is a conclusion is what? You're charging depreciation under straight line method. Because under straight line method, what is the journal entry or how do you calculate depreciation, sir?
Original cost minus
You take original cost minus salvage value divided by the life or the useful life of the asset. Correct? No? People? Okay. How much did you buy this fixed asset initially for? 50 lakh rupees. Okay, you bought it for 50 lakh rupees. After that, you received grant. You received 10 lakh grant. What did you do for that grant?
reduced from the cost.
You have reduced it from the cost of the fixed asset. Now, is the cost of the asset 50 lakh or is it lesser?
40 lakh.
It will reduce by how much? 10 lakh. Because this 10 lakh was towards grant. Correct? Huh? So, that means the cost of the asset is only
40 lakh.
40 lakhs. Yes. So, you got to the cost portion for SLM method depreciation. You have to also reduce what, sir? Salvage value. Check the problem. Have they given salvage value in the question? The salvage value or residual value is given to be 5 lakh rupees. Done. Divided by the useful life. What is the useful life? 5 years. So divided by 5 years, you do. How much is that? So depreciation every year is 7 lakh rupees. That's all. Narration is being depreciation charged. Okay. So depreciation is an expense. Where will this expense go off to? P&L. So the transfer entry will be P&L account debit 7 lakh to depreciation account 7 lakh rupees. Being depreciation transferred or being depreciation charged to P&L or transferred to P&L. Something like that you can write. Easy peasy. This is the first year drama. But they asked us to do this for how many years? 2 years. Now, second year also, did you buy another fixed asset? No. Second year again you received a grant. No. So what else happened in second year? You still have fixed asset, means you will calculate depreciation on this asset for second year. So same entry will come for in the second year. What? Depreciation account debit to fixed asset account. Will the amount of depreciation change or same? Same. How much is that? 7 lakh, 7 lakh. And this depreciation in the second year again will get transferred to P&L account. So the transfer entry is P&L account debit to depreciation 7 lakh, 7 lakh. That's all. This they are asking for around 5 marks. Can't you take care of this? Quite straightforward, right? Understood. Okay, great. So depreciation should change. Huh? Somebody is asking one question. Sir, first year when you calculated depreciation, the life was 5 years. Second year when you come to, the life is only 4 years. Then why you didn't reduce depreciation, sir? Second year depreciation is also 7 lakh only.
Divided by 4 will get the same.
Because it is one blunt answer I can give is it is a, what is the method of depreciation? Straight line method. So depreciation will look like a straight line, meaning every year it will be same. Even if you calculate, you will get, since you have asked, no problem, we'll calculate. Okay, na macha? Actually, the formula to calculate depreciation under straight line method is not original cost. It is actually depreciation is given by book value minus salvage value divided by life. Why we don't use book value is, under straight line method, every year will we calculate depreciation or it remains same? It remains same. And initially, if you buy an asset at original cost, that original cost itself is your book value. No? Correct? So that's the reason instead of book value, we use that formula is famous. That is what? It is original cost. In reality, it is not original cost. Rather, it is book value. Let's calculate depreciation for second year also since you have asked. Okay, now. Sir, how do you get? Tell me the formula for straight line method. Now, just now told. Don't write original. In your examination, write original cost. But as per your thinking, it should always be what's a book value. Okay. First, can you tell me what is the book value of the asset at the end of, before I get to depreciation? What is the book value at the beginning of year 2? Can you tell me that?
32 lakhs.
You bought the asset for how much, sir? 50 lakhs. Okay. Then you received a grant of 10 lakh. Just check where and all you're debiting and crediting fixed asset. First, you debited by 10 lakh. Then you credited by 10 lakh. Due to depreciation, again you credited by how much? 7 lakh. Yes, no, sir. So that means what is the book value? 33 lakhs. Okay, okay, okay. Good enough. All right. Excuse me. Now let's recalculate depreciation. What is the book value? 33 lakh rupees. Minus, what is the salvage value, sir? Salvage value is of 5 lakh rupees. How many years when you bought the asset? In fact, in the denominator, it is not a life, it is the remaining useful life. It is not useful life, it is remaining useful life. When you bought it, the life was 5 years. How many years already over? We are in second year, so how many years already over? 1 year already over. So the remaining useful life is 4 years. Recompute. How much are you getting? 7 lakh. Is the computation really necessary? No. So because even if you compute, you will get the same answer. That is the reason we don't compute it for the second year. But if you have to compute, you have to compute like this. Okay. So yes, your thoughts was right. Denominator is 4 years. But you should also give thoughts to this. It is not original cost. It is book value. Take book value and compute, you'll get the same answer. Got it, everybody? All right. Any other questions or done or done? No. Problem done or one method done? One method done. What is the method name? Asset cost reduction method. Anyone has to copy anything?
No, sir.
Can I go for the second one then? All right. Second one, maybe I'll do it over here. Question number 1. The second one is either you can call it as deferred government grant method or you can also call it as deferred income method also. Or maybe we'll stick to the name given by study material. What are they using? They're using deferred income. Okay, we'll call the same name. Deferred income method. Same question, but we're solving under a different method. No matter how you do, final impact in P&L will be same. I'll prove it to you also. First, maybe I'll keep the format in here. Date, particulars, Magica. Actually, not a bad idea, no? Leave it. So I'll make the format and then do magic. Date, particulars, debit, credit. Or hang on. Sir, okay, let it be fine, no problem. I'll show it to your next problem. Okay, so this is the format. Can I get started? Can I start solving? Okay, first, we are solving from the beginning, okay? First, what did you do, sir? First, the company has purchased a fixed asset. What is the journal entry for fixed asset purchased? Fixed asset account debit. Fixed asset account debit to bank account. How much did they buy it for? 50 lakh rupees. Narration I will not write. Can you manage that? Only for the ones which are different, I'll pass. Then, after you purchase the asset, what did the government do? They granted you some money. So that means you have received the grant. So if you have received the grant means you have to do what? You have to debit bank. How much grant did you receive from the government? 10 lakh. Okay. So what is the method name? Deferred income method. So is it saying asset cost reduction or something else? Income method. So you can't credit the cost of the asset now. You can't credit fixed asset account. Rather, you will park it in another account known as deferred government grant account. This 10 lakh, you will park it in another account known as deferred government grant account, or you can also call it as deferred government grant income account also. Anything is okay. All right. I don't know what they're using. I think they're using the same. It's fine. Just park it in this account. I'll tell you how this works. The narration for this is what, sir? Being grant received. Okay. Sir, in fact, this is in year 1 only, no? Any drama happened in anything else happened in year 1 or that's all? You have asset. If you have an asset means you should calculate depreciation. Tell me the journal entry for depreciation. Depreciation account debit to fixed asset account. You have to calculate. Now again, which method? Straight line method. Will you say original cost? If you wherever you're writing, you write original cost. But in your thinking to calculate, you'll say book value minus salvage value divided by remaining useful life. So when you bought the asset, how much is the book value of that asset? 50 lakh. Because if you buy it at 50 lakh, you will record the asset at 50 lakh only. No? So original cost and book value at the time of purchase is same. Okay. So 50 lakh rupees. Done, sir. Minus this 10 lakh, will you reduce it from the fixed asset account? No. Have you credited fixed asset account for this 10 lakh or have you parked it in another dummy account? You parked it in another dummy account. Not necessarily dummy, but you parked it in a different account. Correct, sir? So that means what is the book value of the asset? 50 lakh only. Minus what? Salvage value. What is the salvage value of the asset? 5 lakh rupees. Divided by useful life. When you bought the asset, what is the useful life? 5 years. So that means the depreciation will be 9 lakh rupees. Okay, now? Under that method, you got a depreciation of 7 lakh. But here you are getting a depreciation of 9 lakh. Okay, hang on. So far, good? This depreciation is an expense. This expense, where will you transfer off to? P&L. So that means the journal entry will pass as P&L account debit to depreciation account 9 lakh and 9 lakh. Okay, sir. Now check. What is the method name? Deferred income method. So this 10 lakh is your income, but you can't transfer this income to P&L immediately in the first year. You have to do what? Defer it. Defer means not booking it in 1 year, booking it over many years. Deferment simply means you are elongating the process. Like we extend the class sometimes unnecessary long. Like that. Teachers will say unnecessary, too much drama they do. No, like that. Deferring means just elongating the process. Fair enough, sir? Now, this 10 lakh rupees deferred, there's an income. It will go to P&L, but it will not go to first year P&L. It will go to 5 years P&L. It will be transferred to P&L over 5 years. Why 5 years? Perfect. Why did you receive the grant? Because you purchased the fixed asset. How long you are expecting to use that fixed asset? 5 years. That means how long will that fixed asset stay in your business? 5 years. That means this grant also should be amortized or deferred to P&L over 5 years. If useful life is 10 years, you will defer it over 10 years. If useful life is just 1 year, entire thing you will defer it in 1 year. Like that. Did you understand, sir? This deferred grant income, I have to transfer it to P&L. What is the journal? I've credited this. If I have to transfer to P&L and I've already credited this, that means what do you tell me? What is the journal entry? Deferred government grant account debit. Correct? Because here I've credited. This I have to transfer means, if I've credited means to transfer, I have to do ulta, which is debit. Where will I transfer this to? P&L account. Deferred government grant account debit to P&L. All right. So how much is the deferred government grant? Total is 10 lakh. You will defer it over how many years? 5 years. That means every year P&L, how much will you transfer? 2 lakh rupees. Easy, people. That's all. Okay, now. Now, final impact is the same. Check. So, depreciation is an expense. Do you agree? How much expense are you getting under this method? 9 lakh rupees. Deferred government grant is an income. Yes, no, because you're crediting P&L. No? Yes, no, sir. That means you're booking how much income in the form of deferred government grant? 2 lakh. What is the net impact? 9 lakh expense in 1 year, 2 lakh income in 1 year. So what is the net impact? 7 lakh. In the previous method also, what was the net expense? 7 lakh. So whether you do this method or that method, final impact in P&L will be same. So which method should the company go for? Their choice. Both are equally acceptable. The company has to choose one and continue with that is all. Okay, sir. All right. So I think this is for 1 year. Everyone understood this method now? Any confusion in any of the journal entries that we have done? No. So narration, if you want, you can write here, being grant amortized to, being deferred government grant amortized. You can simply write like that, amortized to P&L, like that you can write. Sir, they asked the journal entry for how many years? 2 years. Again, did you buy the fixed asset in second year? No. Again, did you receive the grant? No, sir. But in the second year, did you use the asset? Yes. So that means will depreciation come? So that means in second year, will this entry come? In second year, I'll just put a tick mark. In second year, this entry will come. Yes. Will the transfer entry of P&L to depre will come? Yes. Will deferred government grant to P&L come? Yes. Because this entry you have to pass it over how many years? 5 years. Or maybe I'll pass it off. It's okay. Second year, again you have to pass the journal entry, depreciation account debit to fixed asset account. Since straight line method, will the depreciation change or same? Same. 9. Balance sheet. Balance sheet. Share. No, you show it under non-current liabilities because you may have to refund it. No. So you can show it. There are multiple approaches for it. We'll learn all that in CA final. They're not testing all that here. Okay. Multiple approaches are there. Yes, with this. Okay. Then this depreciation will be transferred off to P&L. So transfer entry is P&L account debit to depreciation 9 lakh, 9 lakh. This grant, is it a one-time activity or you have to defer it over 5 years? 5 years. That means will the same entry come in the next year also? Yes. Here you have credited deferred government grant. To transfer, you have to debit. So the journal entry will be deferred government grant account debit. To what account? To P&L account. How much? 10 lakh will be distributed over 5 years. That means every year it will be, how much will you transfer? 2 lakh. Alright. That's what. 10 lakh you have to amortize. Somebody saying once more. 10 lakh grant received. Na? That you have to amortize over 5 years. Why 5 years? Because this grant is related to asset. And that asset will stay in the business only for 5 years. So this 10 lakh you amortize over 5 years. That's all. Like Income Tax Act, you do 35D preliminary expense. No? You amortize over 5 years. Same down. That's all. Now okay now? What? Alright. So problem according to me is over. What about you? Feeling comfortable with this? This problem over. Okay. That's all. Okay, what it means? Sir, what is WDV method? What is WDV method? What if WDV method? Okay. What if WDV method? Another problem we'll see. Just what, sir? Concept will change. No. But amount of depreciation will change. Work it out. What is there? That we'll see. One of the problem 8 is there, I think. We'll see that. Not 10 by 4. Huh? What 10 by 4? No. You will not do 10 by 4. What is first of all? No, you don't do 10 by 4. Sir. Income, no, you have to transfer. This 10 lakh you have to amortize over 5 years. Equally to 2 lakh. See, asset will stay in the business for how many years? 5 years. So this grant also or this grant account also should have a balance only for 5 years, not more than that. So every year 2 lakhs if you go on transferring. So year 1 2 lakhs, year 2 2 lakhs, year 3 2 lakhs, year 4 2 lakhs, year 5 2 lakhs. Totally how much will be transferred? 10 lakhs. So the grant account will finally become 0. So you have to amortize it equally. Okay, not like that. Don't take balance and do it. Equal. Don't need to calculate it all in fact. So how do we record this as deferred income? Show it as liability. That you'll learn it in CA final. Don't worry about that for now. They're not. It's not much covered in your syllabus. I don't see any reference for that in your books at all. There in Indies. We'll study there. Any other questions? Anybody? No, sir. Okay, sir. First question over, sir. Okay, this is yours. Let's see how well you have understood this topic. If at all you have understood. I'll read the question. You have to give me the answer. Don't look at the solution. Okay? Check the screen. Don't look at your books. Don't do cheating. Santosh Limited received a grant of 8 crores from the government for setting up a factory in a backward area. For setting up a factory in a remote area. So, revenue grant or a capital grant? Revenue grant or a capital grant? Revenue grant or capital grant? Capital grant. For setting up a factory, sir. So for setting up a business, government is giving you a grant. Isn't it like government is like acting like a promoter? Isn't this grant in the nature of what? Promoter's contribution. Yes or no? Okay, this grant received is in the nature of promoter's contribution. So what grant it is? Capital grant. Yes, sir? Okay. Out of this grant, company distributed 2 crore as dividend. Look at the audacity of the company. Government gave grant for what, Joy? To set up a factory. 8 out of this 2 crore rupees, they are giving it for a dividend. Also, the company Santosh Limited, they received a land at free of cost. Is this a grant? Yes. Monetary or a non-monetary grant? It's a non-monetary grant received at what value? Free of cost from the state government. But the company has not recorded this at all in the books, has no money has been spent. Accountant is saying, I did not give any money, so I will not pass journal entry. I will not record it. Correct or wrong? If you have received non-monetary grant at free of cost, what we have to do? Record it at a nominal. In the light of AS12, examine whether the treatment of the grant is correct or not. Both the treatments are? Can we give the solution? Okay. All right. Awesome. So question number 2, I'll write the solution. I already told you how to go about solving these questions, right? First, you write the provisions. Then you write what has happened in the case study, and then finally conclude. Okay. First, we'll write the provision. As per Accounting Standard 12, accounting for government grants. Grant received or grants received in the nature of promoter's contribution. Grants received in the nature of promoter's contribution should be shown under where, sir? Under shareholders funds. Should be shown under shareholders funds as capital reserve. And these are not available for dividend declaration. These are not available for dividend declaration because you pay dividend from P&L, no? From the free reserve. If you remember, we have already done. Free reserve means that reserve which are available for dividend declaration. Capital reserve is not a free reserve. So these are not available for a dividend declaration. This is your point number 1. Look at the marks and accordingly write. Okay, if they give 5 marks, I'm giving you the solution for. If they give you only 2 marks, write the simple provision in 1 or 2 lines and conclude. 2 points you write and finish it off. Okay, accordingly take a call. I'm just giving you a longer answer because sometimes they may give you this case study for 5 marks also. And second point was also there, no? If you are receiving any non-monetary grant at free of cost, we should record it at nominal value. Non-monetary grants received at free of cost. Received at free of cost should be recorded on. Received at free of cost should be recorded at what value? Nominal value. Is there any fixed nominal value or it could be anything? Could be anything. That is company ka choice again. Take a call based on marks. Okay, if it's for 2 marks, not everything not required. Okay. Next point I will write in the present case. Company, which company is this? Santosh Limited has declared dividend out of grant, no? Has declared dividend out of grant received and not recorded land received as grant. And not recorded land received as grant. And what is the final conclusion? You can simply write, I can write again, it should record the land, or simply you can write accounting treatment given by the company is not accurate. Accounting treatment given by the company is not correct as per AS12. Mm-hmm.
Receive a RAM.
Sorry, sir.
They receive land as
Mm-hmm.
a non-monetary grant, so at free of cost.
Mm-hmm.
We recorded
You don't do anything for that. He's saying, sir, you have received land at free of cost. The market value of the land is around, let's say, 1 crore rupees. We have received it free. So we have recorded in our books at nominal value, let's say 100 rupees. The market value next year has appreciated. From 1 crore, it has become 5 crore rupees. What we have to do? Nothing. Nothing as per AS 12. As per Ind AS, you can do a lot of things. Log on, not go there. Okay? Difference of opinion. Okay, Ind AS gives you a different treatment. Ind AS in fact tells that, if you want it, just for the sake of discussion, Ind AS says even if you have received land at free of cost, you can either record it at nominal value or you can actually show it at fair value also. Meaning you can record it at market value or nominal value as per Ind AS. Are we following Ind AS or AS? AS. That means for our exam, what we should write? AS. So any appreciation in market value, you ignore. Don't do anything for that. Okay? Leave that out. Uh-huh.
So if the grant is received for promotion contribution, we should treat it as capital, sir.
We should not treat it as capital. You should show it under shareholders' funds, because capital you show it under shareholders' funds.
Capital resources, even in non-monetary grant, it is for capital purpose.
Yes, but with one asset can you set up? I understand. See, not to set up business, you need various assets. Correct. Now, just with one assets, can you do a business? No. So like that. So you have to take a call based on that. So normally, if the government grant is received for setting up a factory and all, that we say it is a straightforward capital grant and transfer it off to capital reserve. But if you have received an asset, with one asset you can't do business. In fact, this you have to go to Ind AS 103 business ka definition. For it to be business, there has to be input, process and output. Input me. Okay. See, for you to do business, okay, now let's take our thing. Just this is not required for others. If you want, you can just shut it. You're asking, I'm just saying. For us to do a business, think about ArivuPro. Do we need only teachers or we need other resources also? So teacher is one of the inputs. Asset is one of the input. Correct? Now without this iPad, TV and all, can I conduct a business? No. So this is input. But at the same time, I should also have a process. Process means every business will have a structure, no? If you are producing something means you will have a proper structure for it. Like Coca-Cola. Just like randomly they will produce that drink, or there is a clear protocol to produce that McDonald's McDika burger. They clearly know it has to be heated at this temperature. This much quantity of food should go in. It should go in this machinery only. Correct? Like, isn't there a process? So like that. For you to call something as a business, there has to be an input. There has to be a process. And because of this input and process, you can generate an output in the form of revenue. Then we call it as business. If you have just asset, it won't constitute a business. Not in there in your syllabus. CA final, Ind AS 103. Oh, anything else? Anyone else? No, sir.
Chase point, following deferred government grant, asset got destroyed with will I be able to still charge that deferred government grant?
That depends. Somebody is saying, sir, I purchased an asset. Because of that asset, I received a grant. Everything was smooth. But in the second year or third year, asset got destroyed by a fire. In that case, what I have to do? You'll have to refer to the terms and condition of the grant. Who gave the grant? Government. Who will put terms and conditions? Government. If government says no problem, it is not your mistake, then you can continue to do it. Whatever you're doing, you can continue, or you can, that whatever deferred government grant balance is there, no, that you can entire amount you can transfer that year itself to P&L and close off. Or government may also tell you are responsible. It is your responsibility to take care of the asset. Since you destroyed it, you have to refund the grant. Refund of grant is next topic. We have not gone to it. Okay, it could be, because I can't tell that. That depends on the terms and conditions of the grant. Both the possibilities I've shared it with you. Okay. Anything else? Don't we have to mention in point number 3 that they have not recorded? Here only I've mentioned, no? And not recorded at land at here only I've mentioned. If you want, again you can call out the masala, mirch masala, how much ever you want to add, you add. It's fine. Your vocabulary. According to me, this is good enough. You want to add more? Bindas, you're right. That's all right. Fine.
Non-monetary grant should be shown at nominal value, where it should be recorded.
Asset, no. Asset, where will you show? Balance sheet. If you received land at free of cost, you will show land under where? non-current asset. Show the arrow, that's all. Anything else or next question? Next question or what, sir? Next question. Okay, next question is also yours only. Let's see. Top and Top Limited had set up its business in a designated backward area which entitles company to receive the grant from India, entitled to receive from Government of India subsidy of 20% of what's cost of investment. That means government has made one promise. They're saying if you set up a factory or if you set up a business in a backward area, how much ever you invest, 20% of that I will give it back to you. So darodu they are. But it is given for setting up a business. That is a keyword. Yes, sir, everyone? Tell me. Revenue grant, capital grant. Capital grant. Because the grant received is in the nature of promoter's contribution. It's like capital contributed by the government. Yes, except that you are not giving any shares to the government. That's all. How much, having fulfilled all the conditions, the company on its investment of 50 crore. How much did the company invest, sir? 50 crore. So how much grant will the company receive? 50 crore ka, whatever is the cost of investment, 20% of that grant will be received. 50 crore ka 20% is how much? 10 crores. And receive 10 crores from the government in January 27 and this accounting period. The company wants to treat this receipt as an item of revenue, meaning they want to treat this grant as a revenue grant and thereby reduce the losses on P&L account for the year ended 31st March 2020. So they want to treat this as revenue grant and book it as an income. 10 crore, they want to show it as an income. Acceptable or not acceptable?
Not acceptable.
Not acceptable. Did you understand the question or the treatment that they are wanting to do? They want to treat it as revenue grant and all revenue grant goes off to P&L. Yes, sir. So they want to book it income. Acceptable or not acceptable? Not acceptable because this is a capital grant. How will you answer? What will you write here? As per AS 12, comma, grant received. Grants, write down, don't be lazy so that you remember the keywords there. Okay, so first provisions and all, especially the provisions. Other things, if you don't want to write it, is fine. Provisions, make it a point to write so that automatically the things gets registered here only. So going home, you just have to revise this in hardly 10 to 15 minutes. Revision also should be done. Okay, as per AS 12, grant received in the nature of promoter's contribution. In the nature of promoter's contribution should be shown under shareholders funds. Should be shown under shareholders funds as what? As capital or under capital reserve or as capital reserve. And is this available for dividend declaration? And this is not available for dividend declaration. Same as the previous point which I have written. This is the point number 1. Second point, in the present case, comma, what is the name of the company? Top and Top Limited has received a grant of 10 crore for setting up a business in a backward area, correct? No? Backward area, and wants to recognize this 10 crore as, or wants to recognize this 10 crore in P&L. Can I write? They want to recognize this in P&L or as an income, you can write, that's fine. Can they do that? No. So conclusion is what? Since it is a capital grant, comma, accounting treatment, have they already done that or they want to do? They want somewhere they've given, huh? Where they put? Company wants to. Okay. So that means we'll accordingly conclude. Since it's a capital grant, accounting treatment desired by the company, can I write? Desired by the company is not correct. Is not correct as per AS12. Meaning whatever they want to do is not correct as per AS12. That's what I'm trying to write. Next. Copying. Break, huh? Wait. One more is there. I think then we will. So early one break, huh? I thought you said break. Okay. Okay, next. What is the next question? Fourth question. Where is it? Okay, over here. Sir, how do you treat the following in accounts in accordance with AS12? 35 lakh received from the local authority. Sir, grant need not necessarily be received by central government, state government only. Even you receive from local authority like BDA. If you have any municipal corporation receiving money from them, that is also considered as a grant only. Okay. So here you have received from local authority, meaning government ka sub-body only, for providing medical facility to employees. So providing medical facility to employees and all is a once in a blue moon kind of activity, or these are recurring? Medical facilities, almost insurance and all, almost every company gives it to their employees. So what are these? These are capital grant or revenue grant? Is this necessary to set up a business, sir? Don't worry about that. If you're feeling revenue for you to conclude means, think about capital grant. Capital grant is necessary for you to set up a business. Is this necessary to set up a business? No. So that means, is it a capital grant? No. Something which is not a capital grant automatically becomes what? Revenue grant. Yes, sir. Everyone, what you can do for revenue grant, tell me. Revenue grant goes off to P&L. Okay. Either you can book it as a separate income. Alright, or you can reduce it from related expense. Can you tell me what is a related expense over here?
Medical fees.
Perfect. You're giving this facility to employees, no? If you remember your P&L ka format, there's something known as employee benefit expense. Do you remember?
Yes.
Salary that you pay to employees, you show it as salary. Those of you who have not done Schedule 3 P&L, salary will you show to employees in P&L? So this grant received, how much grant you received? 35 lakh. Reduce that from your salary cost. Reduce this 35 lakh from your expense or show this 35 lakh as a separate income. Both the approaches are acceptable. Got it? So what will you simply write here? They've only written over here. It is in the nature of revenue grant. Is it okay? Can we go through with this? It's fine. So first one is a revenue grant. Revenue grant means you will show it in as a separate income in P&L. Or you can reduce 35 lakh from the related expense. Related expense ka name is what? Employee benefit expense. This is the name which Schedule 3 of Companies Act 2013 gives you in P&L format. You don't call it as salary and wages. Whatever you pay to the employee, we call it as employee benefit expense. From that, you can reduce. Can I treat it as okay that you can manage this, or you want me to give you a line, or comfortable? Okay, no? All right. Next one then. 100 lakh received a subsidy from central government for setting up a unit in the notified backward area, and they only told this subsidy is in the nature of promoters contribution. If the grant is received in the nature of promoters contribution, what sort of a grant is this? It's a capital grant. Where will you show capital grant? Under shareholders funds as a capital risk. That's all. It's the same. Third time the same question is coming. Okay, now sir, like this they may ask you a question. 2 marks, 3 marks. If it comes for 2 marks, don't write long stories. Just write 1 or 2 lines and you're moving on. It's fine. Done? Alright, so let's go back once again, then we'll see. What and all we have learned so far? AS12. Provisions will keep recapping, sir. Because the idea is I don't want you to go home and study again. Idea should be only to go home and revise. So as much as possible, let's retain it and remember it here only. So AS12 talks about accounting for government grants. So that only talks about if you're receiving any cash from the government or any other assets from the government. Okay. So 2 broad-based approaches, capital approach, income approach. If the grant received is like capital, or rather if the grant received is in the nature of promoters contribution, such a grant we call it as capital grant, and it goes off to it is shown under shareholders funds as a capital reserve. And from this, can you declare any dividend or not available?
Not available.
This is not available for dividend declaration. Any other grant becomes your revenue grant. Revenue grant goes off to your P&L. Since you are receiving it, you can show this as a separate income in your P&L or reduce it from any related expense. You have a choice there. Okay, then for conditions for government grant is two conditions. Reasonable assurance that the company will comply or the entity will comply with the conditions put forth to receive the grant. And then reasonable assurance that the grant will be received. You need not wait till the grant is received. The day you get reasonable assurance that you will receive it, you can go ahead and book it. Then we saw non-monetary grant. Non-monetary grant means those grants whose value fluctuates. Like if you are receiving any fixed asset or intangible assets directly from the government. You are not receiving cash, you are receiving asset directly. Then check how are you receiving the grant, at free of cost or at concessional value. If it is at free of cost, can you ignore the accounting or you should record? You should record it at a nominal value. This is only for the sake of control. Just to show that you have this asset and you are using this asset, we record the asset at nominal value. If you have received this non-monetary grant at concessional value, meaning at a discounted price, then record it at that concessional value or discounted price itself. Then if a grant is related to a specific fixed asset, then what do? Then you have two possible methods. One is the asset cost reduction method. Another one is a deferred income method. Under asset cost reduction method, first you buy the asset, then you will receive the grant. When you receive the grant, whatever grant you receive, that grant directly you reduce it from the cost of the asset itself. I mean, can I say when you follow this method, cost of the asset will reduce. Since cost is reducing, depreciation also will reduce. Because depreciation you calculate based on the value of the asset. If the value of the asset is reducing, your depreciation also reduces. Easy?
Yes, sir.
Second method is a deferred income method. Under deferred income method, first you pass the journal entry for asset purchased. What is the journal entry you will pass for the grant received? Bank account debit to deferred government grant. On this asset, you calculate depreciation as per your normal process, whatever it is, straight line, WDV, whatever method. What about this deferred government grant? This will be transferred off to P&L over how many years? That depends on the asset ka useful life. If asset useful life is 5 years, so the grant also will be amortized or transferred to P&L over 5 years. That's all. And the transfer entry will be deferred government grant account debit to P&L. Yes, sir, everyone. That's all conceptually we have done so far. All right. Thank you.